Welcome to today's episode of Positively Geared. I'm here again in the studio with Lloyd Edge. Lloyd, great to see you.
Hi Alex, how's things today?
Really well, thank you. It's just the two of us today, which is a bit of a shift from what's become the new norm. We've had some fantastic guests in over the course of our series. But today we're going to speak about something which we haven't really shed too much light on, which is Aus Property Professionals, your buyer's agency firm, which you're the director of. For those who might be first-time listeners or just recently new to the series, Lloyd Edge is actually the director of Aus Property Professionals, buyer's agency firm. They've had a tremendous year, nominated finalists in the REB Awards and also the Real Estate Institute of New South Wales Awards, both as a company and Lloyd himself. Lloyd, tell us a bit more about the business, where it started and obviously where you're at today. I suppose the investing side and a lot of what we talk about in the book, Positively Geared, that you also talk about, you've been able to forge all that knowledge and you actually now provide this service on a daily basis to customers.
Well, that's right, Alex. And as we've covered a lot during our episodes about how to start an investment portfolio and how I started, essentially during the course of my years of teaching, I was building up my portfolio. And then I got to the stage where I guess I really wanted to achieve some goals. I didn't want to teach forever because it wasn't going to provide with good super in the future and all that kind of stuff. So building out the portfolio with those dreams was really important to me. I got to the stage where my passive income from my own portfolio was more than what my salary was as a teacher. That allowed me then to achieve my goals of being able to sort of move away from teaching. But I didn't want to just sort of sit around and do nothing. And the way the business started was not so much like, one day I just wanted to become a buyer's agent or anything like that. But it was more that when I started to have a fair bit of success in some of my earlier investments, and I was getting a little bit of media recognition in some of the property magazines and on radio and stuff, I actually had people contacting me and asking me for a bit of advice. And of course, back then I wasn't qualified to give that sort of advice, not officially anyway. But one thing led to another. With enough people wanting to get my advice and things like that, I ended up, doing the license to become a qualified real estate agent and property advisor and stuff like that, so that I then could become a buyer's agent. Essentially, the business started before it was Aus Property Professionals. I actually had a blog where I was just putting out free information, and it was actually called Aus Property Power Hour. Power was sort of a pretty cool name, which is sort of, talking. And from that, I had a lot of interest and, people sort of, asking me questions and stuff. And it was just chat, just free information. I wasn't trying to sell anything at the time. It was just because I loved talking about property. That's essentially how things started to take off from there. And then, while I was still a teacher, I got my qualifications to be able to work in the property industry and got the business going from there. And then had a lot of clients coming to me and everything.
So how long has it been now, Lloyd, since you made that transition from teacher to full-time buyer's agent?
Yeah, so I've been out of teaching now for probably 6 or 7 years. And I was also working in the business for a year or two before I actually retired from teaching as well. So I was doing a bit of buyer's agency and teaching at the same time.
And did you know, I suppose, in that initial period that you were definitely going to move? Was the goal, once you sort of established that, okay, we're more passionate about property than we are teaching? And that was just that, I suppose, sea change for you at that time. In the early stages when you're working across both industries, was the plan at that point to then go full force into the buyer's agency firm? Did you know at that point?
It was, Alex. I had a definite plan of when I was going to retire from teaching. So that was absolutely the definite plan there. And it's more like combining two passions. So combining education and property. Because what I do these days is I really teach and educate people around property. So I'm just combining those two passions.
I like, Lloyd, that you just referred to, you had a plan, and across the series of podcasts we've done in your book, Positively Geared, pretty much everything's focused around having a plan and a strategy behind everything you do. So tell me a bit more about the strategy for Aus Property Professionals in its early days, and tell us a bit more about what does a buyer's agency business do, because there's so many services that you guys offer.
Yeah, I think the first thing to actually, there's probably a few questions there, but I probably want to talk more about what a buyer's agent actually does to start with, because I think a lot of people don't really get that. Essentially, when people are selling a property, they're always represented by a real estate agent who's trying to, sell the property for the highest price for the vendor and things like that. When you're buying a property, you're very rarely represented because you actually have to go to the real estate agent and buy through them, and then you're dealing with someone who's actually on the vendor's side. A buyer's agent actually represents you as the buyer. So a truly independent buyer's agent is someone that, as a buyer, you pay the buyer's agent a fee, and they go and source the properties based on your criteria, what you're looking for, and the buyer's agent does all the negotiation on price. They might bid at the auction. They'll also help with contract negotiations along with your solicitor and help manage the whole purchase through to a settlement.
Lloyd, over the past few years, speaking more strictly about the Sydney metropolitan market, my observations are that the stock levels have been progressively down year on year since sort of the last peak of the previous property cycle in 2017. Except for this year, mind you, because the numbers have come out recently and we have seen a slight increase in stock levels in that time. Over this period, I've observed a much stronger prevalence of buyer's agency firms in the market. Being a finalist with the two most recognised bodies, arguably, in real estate in the country, obviously REI for New South Wales, the Real Estate Institute of New South Wales. What are you guys doing and what do you feel you bring to the table to make sure that you're always playing at the peak of all the buyer's agents in the market at the moment?
Look, I think the main thing, Alex, is being very authentic and really understanding what our clients want. What people need to look for in a good buyer's agent, though, and something that we bring to the table is the experience. So, for example, you don't want to buy property through a buyer's agent who hasn't bought property before. A bit like you're not going to take your car to get fixed by a mechanic who's never fixed a car before or hasn't fixed your brand of car. Obviously, people will be aware that I've got a large portfolio. The other buyer's agents that work for me in Aus Property Professionals, they all have property portfolios. So when clients come to us, they can be assured they're working with someone who's got that experience. And I think that's what a good buyer's agent brings to the table. But the other thing also are having good real estate agent contacts. So we do a lot more than just, find properties for people because we get a lot of stuff off market. And for example, when I'm finding properties for clients, I don't sit there and just trawl, realestate.com or Domain, but I call agents and I see what they've got coming on the market or that they might have pre or off market that actually suits my client's criteria.
That's a great point, Lloyd, because it sort of brings it back to what I was talking about in terms of stock levels. Over the last couple of years, while stocks remain low in a lot of the Sydney metro areas, comparatively, there has been also a shift towards a lot of properties transacting off market or on the quiet, for lack of a better term. Having a buyer's agent like yourself with those relationships that can actually find those properties is very important. And it's a great benefit of working with you and your company.
Yeah, it is very important. And the thing is that, I get calls from real estate agents almost every day offering me types of properties that are off market. And while a lot of them may not suit my client's criteria, some of them will. I'm not going to present a property to a client if it doesn't suit what they're looking for just because it's off market, but it does open up a lot of options. There were a lot of properties, particularly at the higher end. If people are looking for those homes in the higher price brackets, 2, 3, 4, 5 million plus, a lot of vendors don't want to list those properties for various reasons, privacy reasons. They don't want people trawling through their properties. Real estate agents who get good relationships with buyers agents, that relationship can work very well and can be a win-win situation for both the vendor and the buyer.
Lloyd, I want to ask you, in your experience and your view, and it's just your view, do you feel for a buyer that you're representing it would be more advantageous to buy a property for them off market, or is it really inconsequential? I suppose if we reflect upon a lot of the teachings and learnings we've had over the course of our series and your book Positively Geared, it really comes down to the numbers. And I suppose if the numbers stack up on or off market, it's really inconsequential.
That's right, Alex. There's a couple of things there because I think if you're buying a home and you're not going to buy an investment property for $3 million, that's kind of a home that you might be looking at. So numbers might be more around the investment property. Our home becomes a little bit more emotional. But I think at the end of the day, a buyer's agent really should be finding you the right property for the right price, never letting you pay too much. Now, we often do save our clients quite a bit on the purchase price through negotiations a lot of the time. Not necessarily all of the time, but what we do make sure we do is don't have our clients pay too much for a property because, we know the true market value of properties.
Lloyd, I think we've really covered off in a well and timely fashion what you guys do on a daily basis, what a buyer's agent can do. What are some of the other services that you do provide that some people just might not be aware that is actually part of your toolkit?
Yeah, absolutely. So a lot of what we've talked about are sort of the full service. People come and they want to buy a home or an investment property. They give us their full brief and we go and do that full service. But, people might find their own property and it's going to auction and people don't have the confidence to bid at auction. So that's where I'll go and bid at auction on their behalf. I've got a very good success record of winning at auction simply because I know the market and I can educate my clients on what the expectations are around what I think the property will probably sell for and things like that. Also, I guess for both investments and for homes, people might find a home. They don't know much about it. Is it a good property and all that kind of stuff? How do they do research on it? So they might bring that to me and I just do the due diligence on that property. So if it's an investment property, we'll just look at the numbers. We'll look at, whether it's in an area that has good government spending and infrastructure and amenities and all that kind of stuff that you look for and just do the full due diligence. So again, That's a partial service where people might have found the property, but we can just do the due diligence on it. And at the end of the day, we can then advise people, because we're completely independent of the sale, because we don't sell property as a buyer's agent, we can advise whether it's a good property for them to buy or not to buy, essentially.
Lloyd, we're quickly approaching Christmas for 2020. It's been a crazy year in so many respects. We've now almost got the benefit where we're getting close to the last stages of the year, and we can sort of look back and reflect on what a year it's been on so many different levels. Speaking strictly about property, what have you seen in terms of trend or noticed looking at the market today versus 12 months ago? There's been so much that's happened. Obviously, COVID is probably the biggest talking point, but what have you noticed in the market?
Alex, I find the market to actually be busier and stronger at the moment than what it was, 12 months ago, which is quite interesting. So, all those naysayers who thought we're going to have a 40% fall in property price and stuff like that, I've always come out and, straight away said, no, that's not going to happen and all sorts of things. But we're actually seeing a bit of a rise in property prices now. I think we're seeing some positive sentiment. People are starting to realize that, the pandemic we've been experiencing is going to be around for a while. People just want to get on and sort of live with it and be positive. We've seen stock levels are probably down a bit, obviously, during the pandemic and things like that. I think there's more stock coming onto the market and things at the moment, but it's a very strong market heading into Christmas at this stage.
I know we don't have a crystal ball, and my view is it's almost more difficult to predict what the market will do in 6 months' time as it will in 2 or 3 years' time, because history tends to repeat itself, or we know at least in Australia markets, they always work in cycles. What's your view coming into the new year, Lloyd? Maybe a better way to phrase that question, what's your expectations of the market coming into the first 2 quarters of next year?
Look, Alex, I think the market's going to be actually really strong going into next year. There's little bit of talk around what happens in March when JobKeeper ends and things like that. However, I think that the government is still going to be very careful around that, because the last thing that the government wants to see is massive rising unemployment or a housing crash or anything like that. So I don't think that's really going to happen. I do think that there's potential for a little bit of increase in unemployment, but businesses are starting to come back. We've seen that Melbourne is starting to come back and everything. And I think that there's a lot of people that are actually getting their jobs back. So the unemployment statistics are not going to be as high as first predicted. I actually think that the markets will be quite positive moving forward to next year. I don't think the recession is going to be as bad as first predicted. I think we're actually, by all accounts, starting to move out of that side of things as well.
We always discuss, Lloyd, that, the best time to buy a property was probably yesterday, but the next best time's today. And it's a question of, okay, well, it doesn't matter what the market's doing. It's more important to focus on the strategy, where you're buying and why you're buying. In terms of looking once again into the new year, is there any key trends that you think we might see in light of, I suppose, this new way of doing things? With businesses have had to adapt pretty quickly to COVID. I think, as an example, we will start to see buyers agencies being more important than ever, and they already play such a pivotal role in the market. Is there anything that you're anticipating from more of a business perspective for the new year?
One of the trends I am seeing, and I've spoken quite a lot about this in various areas, people are now sort of can work at home, and businesses aren't needing people in the office so much that people are now starting to look at moving out to outer suburbs and even regional areas. So I think regional areas are actually going to be quite strong, particularly regional areas that have quite strong economies and infrastructure in place. But even in areas like Sydney, I actually foresee some good opportunities, say on the northern beaches where we are at the moment, where people don't necessarily need to live near the city on the lower North Shore or the inner west, that people feel that they might be able to sort of move out. And I think there's some good value properties in some of the areas around, particularly if we look at, if they're looking for an apartment or something like that around DY and stuff like that. And because they don't need to live so close to the city. And then there's those people who are just looking for a little bit more space, move out to an outer suburb because they just need an office space to work from home and a backyard and things like that. Because living in an apartment when you're in lockdown, I think people realize you need more room. So the trend I would see is that there's going to probably be slightly higher vacancy rates and less demand for apartments in the CBD. We've already seen a struggle for apartments in Melbourne and in Brisbane for a few years now. That's probably going to continue. So I think the property selection type is very important. And that's definitely where a buyer's agent can come in and assist with that.
It's interesting too on that note, we were discussing briefly before we jumped into the booth. I'm seeing in the market at the moment, particularly on the bottom end or the entry level, for lack of a better term, there is a lot more price sensitivity. But I don't think it's price sensitivity necessarily because buyers can't afford to borrow to purchase the particular properties they're looking at. I think coming out of COVID, the needs of the customer or the consumer are changing. As you mentioned, a home office now could be a really pivotal decision in deciding what property to pursue over another one. So I think too, Lloyd, we're going to start to see trends towards the type of homes that will really excel in this new market. And some homes, not that they'll be left behind, but they just might be sort of put in the B or the C bucket in terms of preference for stock.
Yeah, that's right, Alex. And I think what I see also coming is that, people who are sort of on that lower budget, and when I say lower budget, we might be looking at sub 1 million or 700,000 or 800,000, which for listeners outside of Sydney, they're probably thinking, hey, that's a lot of money. But in Sydney, it's going to get you, not a lot of property. People in that sort of budget are going to be a little bit more picky, like you say, because they might be in the market for an apartment or a townhouse, but they do want something that's a little bit more unique, that has a bit more room, that has an office space and all that kind of stuff, for example. People have been a bit more picky in that level, as opposed to people who are buying, your $3 or $4 million home on your northern beaches or even the more expensive homes in the eastern suburbs, because all those homes are already equipped with what people are sort of looking for. So I think it's at those cheaper price points that people are going to start to be looking at really what they want to get in a property for their money.
Lloyd, the other thing which I think if I were a listener today, I'd be really keen to understand a bit more about is particularly for people that are transitioning from that entry market into the sort of $1 million plus market. I think at the moment, we saw earlier in the year, there was a lot of scarcity and fear around what was going to go wrong. And I know you must be really happy that we can finally sit here at the end of the year and say, well, yes, guys, the market didn't crash 40%, as you mentioned before, and it doesn't look like it's going to be doing that anytime soon, if ever. What I'm now observing is that there's a bit more hype back into the market. And obviously people on a daily basis through this digital world we live in are getting so much information thrown in their face. What advice could you give to people that are making that transition that, might have a bit of confidence or feel like they've got some wind in their sails again and they're not quite sure where to put that money next? I know strategy is so important. And at the moment, we don't want the media or sometimes that positive talk to deter people from sticking to what they'd initially planned.
At the end of the day, people really need to look at what they're trying to achieve. And I've always said, what's the goal here? Are you looking for a particular home, or is that the goal to have that dream home in the end? Or, if you're looking to build up that portfolio, are you looking for something that's going to get you growth? Are you looking for some cash flow in your portfolio and so on? And stick to those goals, because what I see is people do get deterred and scared from the media and stuff that happens in the short term. But I see there's a lot that people are always going to be able to make excuses for not doing something, because there's always something that pops up. It might be COVID one day, and then it might be some other pandemic another day, and the property market's going to crash next year. And what happens after the US election, and then what happens if China does this? There's all sorts of things. I think people need to look at what they're trying to achieve and look at that long-term goal. I really think that getting some sound advice around that is very important as well. And again, that's where, like a buyer's agent or a property advisor is important more than anything, to give that advice and also be a bit of a sounding board. Because I've got a lot of clients come to me and they have these fears and questions, but we talk through that. More than anything, I try to keep people accountable and get people to remember what their goals are and try to keep people on track for that.
Lloyd, we've spent the first half of this podcast episode talking about Aus Property Professionals, digging a bit deeper into a buyer's agency firm and a bit more that you guys do beyond what people might just assume from the outside looking in. Let's bring it back to you now, Lloyd Edge, as a property investor, building your property portfolio, which you've had the benefit over the past 2 decades of doing so. And, it's fantastic through this podcast series like Positively Geared and the book of the same name that you're now helping so many other people on their journey to do the same thing. What we haven't spent too much time talking about is we're getting closer to the end goal. And, we all, I assume, build a portfolio for various reasons, but the main reason is financial freedom. So we're doing it to have a better future than our current situation. And obviously we all can't work forever. So eventually we need some money to live off. Otherwise, life's going to be very difficult. I want to talk about the exit strategy as people get towards the latter stages of their goal achievement, if we can use that term. What do you recommend people do in terms of deciding, okay, well, we've bought all these properties. This is great. They're performing well. We've followed the strategy. Which ones do we hold and which ones do we sell? Because those decisions are critical.
Yeah, absolutely, Alex. And that's one of the things that a lot of people miss. And even a lot of people, when they've been advised on property, there's a lot of people say, if you buy 10 properties in 10 years, or some people say if you own 6 properties, you'll be financially free. But then they don't go any further to explain to people how you can actually achieve that. What I try really hard to do is make sure that we're working with our clients over the long period of time, so that they're not just buying one property and it's a transactional purchase, but we're helping them build their portfolio over the long term. They understand how the acquisition part of their portfolio works, and then how they've got to hold their properties, and then what the exit plan is. Because the exit strategy is actually really important because, for example, if people come to me and they, for example, want to have $100,000 in passive income, how's that going to be achieved? Because you could buy 10, 15 properties over the years, but then if you've got lots of debt on all those properties, then you're not really having passive income because all the rent that's coming in, you're still paying a mortgage on it. So how do we transition from having lots of debt to be actually financially free? That's what a lot of people miss. My way of thinking of an exit strategy and stuff that's worked for me is that you really need to firstly, and this sort of goes without saying, but it's really important that you're buying properties in really good locations that do increase in value and also that you can add value to. So a mixture of buying in high growth locations and then of course other ways of adding value through either a renovation, subdivision or duplex and mixing them all into your portfolio. For example, if you wanted to have $100,000 in passive income, you only need 6 properties and they were all paying $20,000 a year, you'd be having good passive income, but that need to be debt free. So you need to be in a position where you acquire around 12 properties and then pay off all your debt by actually selling half your properties. But because of all increased in value, the increased value of the properties that you sell will pay off all your debt. And then when you end up having no mortgages left or very little mortgages left, that's where the passive income comes from. And a lot of people miss that part of the strategy. In terms of which properties to keep, and that's where a good property advisor or buyer's agent comes in handy, because you need to look at which properties are creating the best cash flow going forward, which properties have the highest growth, and which properties are actually purely properties to actually get that equity. So for example, duplexes are a great way of building that equity. They're not necessarily all a long-term hold, particularly if they're in regional areas. They're good for creating that equity. Use that equity, then sell the duplex, use the profits after tax to pay off some other debt. That's really important. The goal is, I believe, to have a property portfolio that consists of properties in the capital cities on the eastern seaboard, so Melbourne, Sydney and Brisbane, and to have those properties become positively geared. And we all know that when you first buy properties in, for example, Sydney and Melbourne, and depending on your LVR, but if you're paying 10 or 20% deposit and the rest is a loan, then they're going to be negatively geared to start with because they're in high growth locations. But you ultimately need to pay down that debt so that they become positively cash flow properties.
Let's say that you're working with a client, they've bought their first 4 or 5 investment properties. They're all positively geared, so they're all income producing. They're not costing the person money to hold. Let's then assume over the next 5 years they acquire another 10 of those. So we'll work on the $20,000 a year. Let's assume that's a gross return, or better yet, a return after expenses. That would by that stage be returning $200,000 in income. If they're all income producing and they're not costing the client money to hold, do you still recommend getting towards the end of that journey to offload some of those properties? Because there's obviously still debt. If they haven't paid down the loan, would the goal be to basically relieve yourself of all debt by a certain date?
Well, at some stage, all debt needs to be paid off because part of a building portfolio, there should be other goals there. So, are you leaving a legacy to your kids? For example, I often joke that my young son, Riley, is the youngest property investor in Australia because he's got his own apartment and he's only 18 months old. That sort of thing. But, I'm not going to leave him with a debt on that apartment, for example. So, you want to be able to pay off all your debt eventually. There's a couple of ways to do it. Obviously, the way I just explained. The other way is to just do it sort of a slower way, which is pay principal interest. If you're young, you start off in your 20s and you just buy a few properties and pay principal and interest for the next 30, 40 years and just pay them all off like that, then that's one way of doing it. That's quite a slow way. My idea around that exit strategy is to fast track things a little bit, particularly if you're starting a little bit later and you have a goal to get to a certain passive income, within a 10 or 15 year period. But I think essentially, Alex, you do need to pay off all debt eventually. And of course, part of that is also whether your goal includes buying, your own home. So, you can be building up your passive income, building up your portfolio, but what about buying your own home? So selling some of those properties to actually help as a deposit to buy your own, dream home and have then a lower LVR on that home is quite important as well. So there's quite a few things to weigh in there. But definitely paying off that debt eventually, I think is a wise move.
Lloyd, we've discussed when you bought your current dream home. I know that dream homes can be changing things, as we've discussed in previous episodes, depending on your needs and wants at the time. Was that a defined part of your overall strategy? Was it always determined that you'd buy the dream home and then you'd also be able to tie that into the exit strategy at the end?
So that's an interesting question, Alex, because it wasn't quite that defined for me. And I wrote about it in the book, Positively Geared. I always sort of wanted to live on the water and I had those sort of goals because back when I was teaching, I used to teach, in wealthy schools and they all drove nice cars and they all lived in waterfront mansions and whatever. Kind of always wanted that, but I didn't quite know how to get there at the time. So I was sort of building up a portfolio and, I had a few homes along the way, which weren't necessarily dream homes. Probably the home we had before our dream home was probably a nice home and it was in a good location, not far from the city. At the time, that was kind of our home. And it was just from building up the portfolio further, getting more equity that I realized that, we can actually actually get into that dream home and using those strategies. It's an interesting point because sometimes I've got clients come to me and, we're looking at strategy and they want to know exactly how they can get into their dream home and at exactly what point in time they can do that. It needs to be a little bit more fluid because it depends on the banks, on how much you can borrow, what they'll lend to you, what the markets are doing, a number of variables. So, so having that goal to have a dream home one day is important. But for me, I didn't have a defined timeline of exactly when that could be because I had to really see how I could sort of build that portfolio first.
Buying the dream home when you did, Lloyd, obviously you're still working. Aus Property Professionals, I'm sure you feel yourself is only 20% of what it can be. You're growing an amazing business and it's already achieved so much great recognition both Australia and statewide. Did you have to make changes to your overall strategy in terms of what the exit strategy looks like buying that dream home? Or was it more a case of saying, okay, well, these are the numbers, this is what we're able to spend, and you kept it within the realms of what was always reasonable?
Yeah, so I didn't really make any changes there, except one thing that I did do is sell a couple of properties to help finance that dream home. One of them was our home previously that I'd already paid off. Selling that allowed me to have a big deposit for our dream home because I'd already paid that home off. And then sold another investment property for a couple of reasons. One, more funding for the home, but also because from a serviceability perspective, the banks required me to sort of sell another property to free up a little bit more debt. Buying the dream home wasn't at the end of my investment journey. In fact, I'm still investing. So I've paid off properties and I'm working on the exit plan. I'm also still acquiring properties and stuff as well. So I'm still very active. Like I work harder now than I ever have. I absolutely love what I do. So, people often ask me why am I working when I could just live off my portfolio, but can't just sort of sit around and sit on a beach or something. So it's really important to me to be able to help others and help people replicate what I do. And you're right, in terms of growing the business, we're getting some really good staff on board and growing the business in general. I think there's a bigger thing in life that is being able to sort of do some volunteer stuff and donate to charities. And that's one of the things about when you sort of create wealth and you're building a business is that you can actually free up some time and some money to actually be able to work towards a greater cause.
Lloyd, if we can bring it back for a moment, because it ties in quite nicely to what we're actually talking about, which is the tail end of the overall strategy. As we've identified, a lot of people are all doing this. They've got a strategy in place. Hopefully they're working with yourself and the dream team, which we talk about so much, their own dream team. And once you're getting towards the tail end and you're executing your exit strategy, as we've discussed, you've got to make some decisions. What properties do we keep? Which ones do we sell? If we can bring it back to just as you were buying your dream home, you mentioned that there were some properties you did need to offload to free up debt. Can you walk our listeners through the decision-making process that you actually undertook in order to do that? Was it a decision that you made, I suppose, in isolation, or I should say yourself and Renee, or was that a time where the dream team was really important to you?
The dream team was definitely important, but for me, it was in discussion, obviously with Renee, but also with my broker, who's Fabio, who's been on our podcast before, because he was doing the finance. So we discussed what we need to do to make things happen to buy the property. So definitely having other advisors. So myself, like anyone else, like when we talk about that dream team and that fact that I put a team of people around my clients, I have a team of people around me. A lot of the professionals that I put around my clients are the same people that are part of my own personal dream team. So, the solicitor, a lot of my clients use the same broker that I use. I refer a lot of my clients to my own personal accountant, for example. So having that dream team is very important. And there's probably another thing that I might also mention also is that you sort of, when you're building your portfolio, a lot of people sort of think about, say, the accountant and getting some advice around tax, but it's also advice around structures that's really important because if you're building a portfolio, the structure, the entity you're going to buy a property in can change, whether it's going to be a duplex development that you might be flipping in a couple of years' time, or whether it's going to be an established property you're buying in a capital city and you're going to hold for a long period of time, as opposed to buying your own personal residence, for example. And of course, the tax implications are different whether you're buying in a trust or whether you're buying your personal names when you're buying investment properties. That's where having really good advice from really good professionals is really important. And getting that advice before you go into sort of each property is very important as well.
Lloyd, for people that may be entering the investment world a bit later in life, let's say they're into their 40s or late 30s, not saying that anybody's later in life, that's perfectly middle age now, but in terms of you might have spent your 20s traveling or whatever the case may be, you've been listening to our series, you've read the book, you possibly have spoken to Lloyd on the phone and, you're really excited about building a portfolio of properties. You might already own one or two properties, but we're speaking more strictly about building an investment portfolio with a view to have a passive income and ideally build some wealth through property. You touched on it briefly before that the strategy changes. What parameters would you put in place for somebody that is starting out a bit later? And also, not that we want to give people at any time false hope, because I think when you're making big decisions, you really got to be able to look objectively too, and particularly that a lot of this stuff's numbers driven. How soon or how late is it to start buying into property and start building a portfolio?
guess the first thing is if you're in your 30s, even your 40s, that's not old because otherwise,
Yeah, I wanted to clear that up.
because I'm well into my 40s now, so and I certainly don't feel like I'm old or anything like that. I might also say that I was in my late 20s before I bought my first property, and I didn't really travel during the 20s. I was just trying to save up. So you certainly don't need to be 22 and buy a property to feel like you're getting going. What's really important though, Alex, is the strategy around what you actually buy. So I work with clients in their late 50s, but they don't have time to be buying high growth properties that are going to take a long time to grow in value there. So having properties that generate instant equity, that have that immediate cash flow is really important. If you're younger, then you would have time to actually buy something that might be more of a high growth property, but the offset to that is it would be lower in cash flow. But ultimately over time, the cash flow will increase on that property. So it's all about strategy and what stage of life you're in.
And the perception might be, Lloyd, that if you are starting later on your property journey, that it could possibly mean that you're in a more risk-adverse profile. Is that necessarily the case?
Not really. It really depends because if you're a little bit later in life, then the banks can see you as a little bit more secure. There's sort of a bit of a middle ground. Generally, if you're 55 or over, the banks want to see an exit plan, how you plan to dispose of the property you buy, because they assume that you're not going to be able to pay that off for the next 30 years. Some are even making that exit plan being required for people who are a bit younger than that. So that's something to consider there. But people who are younger, who haven't ever borrowed before, don't have any sort of credit rating, then sometimes that can be harder to get a loan through as well because they don't have any history. So yes, certainly middle-aged people can be quite comfortable from that point.
Lloyd, if we can bring it back to you bought your dream home, there's people listening today that they might not necessarily be buying the dream home. However, we all know that we all need a place to live in. Now, there has been obviously a new trend towards what we call rent vesting, so renting in the place you want to live and investing in areas which will allow you to achieve your goals through a longer term approach and strategy, which we virtually discuss in every episode in one way, shape or the other. In terms of working more as a buyer's agent, and also having the benefit of so much experience in the investing world yourself, for people that are looking to buy a place to reside in, how does that sort of fit into everything when you're trying to achieve everything at once? So, a lot of people, before they make a decision actively to build investment properties, they're typically firstly looking for a place to live in.
Yeah, that's right, Alex. And I guess the thing is that, we don't want to just be pushing the investment idea onto everybody because there are people who are just wanting to have the comfort of having their own home to live in so that they're not feeling that their landlord's going to kick them out of their rental property every couple of years and things. The other thing I'd also say is that a dream home is a dream home if that's a dream to you. I know we've talked about, waterfront mansions and expensive properties, and we've had, architects and all sorts of people on here to discuss those sort of things and builders and stuff. But really, a dream home can be, whatever people make of it. But I think what's important there is that what a buyer's agent can really bring to the table there is finding something specific to what a client wants. So, people would come to me and I would give them a template, like a real checklist, which is, very extensive of exactly what they want in a property. And that can be, for example, if they're buying something on the northern beaches, then they might say, I want a 5-bedroom house. I want water views there. I need office space. I need double lock-up garage. I want a swimming pool. I want 900 mil appliances in the kitchen. We even can go and find them properties that have the right sort of, the right brands of appliances if that's what they're looking for. If people want 3-meter ceilings or 40 mil stone bench tops, then whatever people are looking for, then we'll go and find those exact type of properties for them to look at. And that's where our service can become invaluable because we sift through everything that isn't suitable for them. So we might look at 50 properties and then there might be 2 or 3 properties that actually check all those boxes, and they're the ones that we can actually present to our client. And that's the same as if you're buying, your $600,000 sort of entry level unit. It's the same thing. People want 2 bedrooms, they want a bit of storage space and things, and they want to live in a cul-de-sac, they don't want to live on a busy road. Just tell us exactly what you want. You want it to be near the station, but not so close to the station that the trains are knocking on your door and stuff. So it's really about getting a real understanding of where you want to live, what your price point is, the budget, and then also managing people's expectations so they understand what their budget will actually get them in the market as well, because sometimes people overestimate what they actually can afford with what the actual market is doing.
Lloyd, being a property investor, a buyer's agent, you spend a lot of time advocating through your daily business and, the podcast series Positively Geared, which we've been doing for some time now, the book of the same name. You're a big advocate for investing through property to build financial freedom. In terms of looking at purchasing a primary place of residence for a customer or for yourself, it is a much more emotive purchase. Being a big advocate for investing and, all of the skills and strategy analysis of numbers required to do that and be successful at it, How do you balance the emotive element of purchasing a primary residence when advising a customer for yourself?
It is very emotional. I guess talking about for myself, I even mentioned in the book that we paid about $1 million more for our home than what the initial price guide was. Of course, the price guide was a little bit underquoted. I mean, I knew all that anyway, but I made sure I was the winning bidder at auction, so we kept sort of traveling along till the hammer fell on for us there. In terms of everyone else, it really is emotional, and it's not so much about the numbers, obviously. What we do want to do is advise clients and help them not to pay too much for a property and everything like that. Often you do need to pay a little bit more for a home that you might need to pay for an investment property, because investment property is just about the numbers, and simply if you pay too much, the numbers aren't going to be as good. But when you're looking at an emotional purchase and it's going to be your home for the next few years, or maybe your forever home, people are often happy to pay a little bit more for that. So it's really a different thing to investing, and it's really understanding what the client's really looking for.
Lloyd, it's been a great episode today. Just the two of us again in the studio having a good old chat like we did throughout the duration of our first series. I think there's been some invaluable information and hopefully people now can take away a bit more of an understanding about some of the things that Aus Property Professionals and buyers agents do on a daily basis.
Great. Thanks, Alex. I really enjoyed talking today about all that.
And Lloyd, for those who haven't possibly looked up your business, where can they find more information about Aus Property Professionals and your services?
auspropertyprofessionals.com.au. We'll get people there. They can check out the website. They can call our office number or leave an inquiry, and happy to chat to people about any of their requirements.
Thanks so much for your time today, Lloyd. I'm looking forward to our next episode.
Cheers. Thanks, Alex.